Okay, right. We have started. So good morning, everyone, and thank you for joining in. So I would hand over the procession to Venuji today, who is the MC for the day. Venuji, what do you?
So, just to tell that we'll try to moderate as much. However, this is a good topic where Padmanathan ji is making sure as all of us are active and discussing. And we took 2 sessions for 15-2. 15-3, hoping to close it today, but if not today, but we will carry on. We'll try to keep the session at close at 10 o'clock. Request all participants, when you are asking a question, be relevant to the thing, and maybe if there is a point of view which you have taken and others have a different point of view, let's agree that and move on, rather than holding our point of view as right. And we will allow the speaker to take care of the session properly. Over to you, Padmanathan sir.
Thank you, Venu sir. As Venu sir rightly mentioned, my job here is only to ask the right questions, put forward the right questions. The group will deliberate on different aspects of it. We are not aiming to come to a conclusion here. We are only aiming to find out what are the possible views which we can take, which the department can also take. And with this very very small introduction, let's get straight into the case study. So our aim today is to close 3 case studies. We have one case study on 17.3 and one on 17.5 as well. 15.5 as well, 15.3 and 15.5 as well. So let's go to the case study regarding the discount. So this is a situation here. So Dr. Back is a mattress manufacturing company. So they run a scheme which goes as like this. Like if the dealer purchases more than 10,000 mattresses in a financial year, then he gets a foreign tour. Alternatively, if he has already gone to Thailand, for example, he can choose to get a discount. He can choose it to get in the form of a discount. And the company is giving in the form of a commercial, GST credit note. So all this scheme, it is communicated to the dealers in the beginning of the year. They have a list of vendors, and in the beginning of the year, they communicate this to the dealers. And now the GST department says that this 2.5 discount, which cannot be given in the form of a commercial, cannot be given in the form of a GST credit note, and they cannot reduce the output tax. So there is a issue going on. Now they want to review the discount policy, and they are seeking our advice as to how to go forward. So this is the issue here. So I am just putting this is a post-supply discount. So I'm putting the relevant provision here. So if supply is affected after if the discount is affected after the supply, then there has to be 2 conditions. The first condition is that there has to be a prior agreement. Such discount has to be established in terms of an agreement entered into at the time or before the time of supply. And second is that it should be, and one more condition linked to that is that it must be specifically linked to the invoices. And the next condition is that input tax credit has to be reversed by the recipient of the supply. So if the supplier wants to reduce the output tax, corresponding recipients has to reduce the input tax credit, reverse the input tax credit. These are the 2 conditions which come attached to the discount affected after the supply. So in this scenario, let us examine whether there is a prior agreement, whether it is linked to invoices, because there are 2 options here, or 2 alternative options. So whether it is linked to invoices, and lastly, whether how to monitor whether recipient is reversing the credit. These are the issues which we have to discuss today. So first we will discuss whether there is an agreement here. Venuji, you want to break the ice?
Okay. See, the agreement can be oral or written. And I would say from the Contract Act, when they have floated this the scheme, so the scheme document itself would be an agreement, and I would say that the agreement is in place.
Okay, so imagine that this scheme document has not been there also. Can we still say that there was an oral agreement? That is a subsidiary question which also I would like to pose to the group.
Before that, the documentation aspect from the audit angle, department will look for 194R. Is Dr. Back deducting TDS on this?
Assuming this is after this 194R is introduced, if they are deducting actually.
No,
So,
Unniji, sorry, I want to interrupt.
Yeah.
Assuming I didn't do 194R. Do you think that non-compliance in one act would change my position?
Not at all, sir. But this is just a
no.
statement.
This is how the audit department is going to link it and from where litigation is going to start. So that is why I wanted to
Agreed.
introduce 194R.
Agreed. I think we should take the aggressive position the client has not done the 194R. Then
Yes, Unniji. Sir, in case there is no written document in place, there is no mail communication, how do we establish that there was an oral communication or an oral agreement? That is the issue which I think we should discuss on.
okay, so for this, maybe I might be jumping the gun in saying this. If other conditions are met, that means the discount is linked to the invoice and I'm issuing a credit note and the recipient has it. So if the actions made by both the parties would indicate that the oral agreement is in place, isn't it?
Sir, are you saying that there is a substantial compliance aspect or that the agreement is implied there?
Yes.
Okay.
Like your example of the case law which you have taken. So that carboxyl, I think when an offer is made and the other person is unanimous, the agreement would be deemed that it exists. So here I am raising a credit note, other person is reversing the input tax credit. Would itself indicate that there has been agreement. Otherwise, both wouldn't be doing this.
So there is
the
a
oral
consensus
agreement can also valid.
There is a consensus of mind, so there is a contract, valid agreement is there.
Correct.
So the point, one question here. The point is that the agreement should be prior to the supply, and it is while there can be agreements, but it has to be prior to the supply. So in case of no or absolutely no nothing to prove on document, then how do I say that there was a prior agreement? It was not a afterthought.
No, sir, the conditions satisfied. What sir was trying to say is that the conditions are satisfied after this supply has been done. Then it can be presumed that there was a contract. That is why these conditions were done. Like the credit note was issued, credit was reversed. All these were done only because there was a prior agreement.
If there is a, sir, shall I tell?
Yes, sir, please.
Sir, suppose, see, there is 10 distributors. Suppose the same criteria is applied to all the 10 distributors, then it implies there was an agreement. So the distributors were incentivized to increase the sales. So 3% are achieved. So we are giving credit for the 3%. That itself will show that there is a implied agreement for that, sir. That need not be in writing or anything. That's my opinion.
Okay.
I supplement what Amit is saying. See, even though oral is an agreement is there, that is a undisputed fact. Having said that, when the officer will issue a notice, he will say you don't have any agreement in a place, and he has just discharged his burden of proof, saying that the agreement is not placed, hence the discount is not allowed as a credit. Now, as a SEC, now you have to establish the fact that there was an agreement. An oral agreement, I would not say it will stand that way.
Got it, sir. Any other view, sir?
Can I also know the reasoning why the oral agreement will not stand?
Documentary evidence we need to prove that the oral agreement was in place. So if you have any call recording, that kind of evidence will be able to help you. But practically, we don't keep any evidence to substantiate that the oral agreement was there.
Sir, what about a
The condition,
after-
Venu sir, is that it should be a pre-supply. When we say the oral agreement is there, the authorities can say it might be a post-supply oral agreement might be there.
No, no. So I am okay with
that it
that.
was a pre-agreement.
No, no. Assuming okay. So now the contention is it oral agreement or the contention is pre or post?
I would say both.
Sir, in that case, what about an affidavit which says that there was an oral agreement before the time of supply? Will that suffice? If both parties are giving an affidavit that there was an oral agreement.
That answer can be given by Padmanathan. He is an advocate. He can establish that.
Venuji,
If
what-
there is no word in writing, agreement in writing, that is not there, sir. So we can say it is a oral or it can be in a writing. That's my view, sir.
Just one point, if the matter comes up in dispute and authorities may want us to prove that whether there was an oral agreement, maybe affidavit can be sworn in that case, that we had agreed in person, verbally, before the supply.
Agree, sir. I agree with you, sir. That is my view also.
What challenge I have faced is in case of Rule 33, they are accepting these verbal agreements. When I am taking the benefit of Rule 33, wherein also they said that you have to have an agreement. But in case of post-sale discount, they are not agreeing to oral agreements. They are saying that, as Amitji was saying, that it's a post-transaction afterthought that you have had, and then you have given the discount. Now, in order to justify, you are saying that. So, in that case, whether the affidavit will be accepted, that is again a thing to be seen.
Arupji, again here my contention is if oral agreement is established, all right, and it is established, but the documentation leads to, that is post transaction, the documentation leads to pre-transaction. So the contention of the department is I don't agree the oral agreement, or the oral agreement is post and not pre.
Yeah, they are taking that ground. That it's oral agreement is a post-transaction afterthought. In fact, in one of the show cause notice, they have written this also.
So good. So which means they are okay with the oral agreement. They are just feeling that this oral agreement is post.
Yes, you see, oral agreement, I think there was a discussion that as per the Indian Contract Act, agreement can be either oral or written.
Correct.
So they cannot challenge that it's an oral agreement is not valid. What they are challenging is that this is an afterthought.
Right. So now the moment they say this is afterthought, now both the parties won an indemnity saying that it is pre.
Yes.
Who has the burden of proof? Now I have discharged my onus saying that you agree with the oral and you are okay with it. Now I myself am agreeing that this oral is pre and not post.
Sir, not only myself, the other party to the contract is also agreeing that it is
Yeah.
pre.
And in one of the matters that we have handled in there, another thing also helped, which is I didn't have an agreement with my distributor, but my distributor had agreement with his retailer. So we had shown that I had no scheme paper with my distributor, but when we agreed between me and my distributor had shared a scheme paper with all his retailers. So that helped us to prove that there was a scheme before the transaction. Maybe between me and the distributor it was not agreed, but between the distributor and retailer it was agreed, which proves that there was a agreement between me and the distributor also. And I think the affidavit is also a good idea to place.
Sir, regarding this point,
Padma, you want to?
yes, sir.
Yeah.
Sir, regarding this point, can we come to a consensus that oral agreement is acceptable? Majority of the group, I think, is of the view that oral agreement is acceptable. To that extent, I think the group is unanimous there.
Yes,
Yeah.
yes.
And can we say that to prove that this oral agreement is pre, an affidavit would suffice? In most cases, an affidavit would suffice.
Yes.
Can we
Yeah, I
go to
think
the
that-
next aspect of it? Next aspect of it.
One more point. This can be an exceptional practice.
Yes, sir.
In a routine transaction, I think the client should be advised to get the documents in place so that this
Definitely, sir. Definitely.
it-
I agree with you, sir. As a planning tax plan or as a compliance perspective, it is better to have a written agreement, 100%, sir. But in case it is not there, still I think we have a really strong case if we can establish by an affidavit that there was a prior agreement.
Yeah, litigation answer is different from consulting answer.
Just I want to add my limited understanding. Whenever there is a oral agreement, right, or oral contract, when they call for evidence, okay, in the court, that's how it generally happens. That's what I have also heard. They say that to substantiate the facts, yes, affidavit is a good option, but they even call for oral
Oh,
evidences. People have to come personally and say that, yes, this is what happened, this is what was spoken, this is what the agreed upon. So that should also be substantiated by the oral, confirmation. Parties are called for personal hearing. So in this case, probably because of the reasons, they generally don't encourage. Courts do not have time, number one. Second, when it goes, this matter, tax matters or something goes for any adjudicating authority or, next level of appellate authorities, they may not have time to call for external evidences. So that point, it will get struck down.
Ma'am,
So-
maybe in section 70, they can summon, the officer can summon any person related to. So he can summon the recipient as well to say that, and take his statement to corroborate this.
Oh, if there is an option available, yes, in such case, they have to call for, oral evidence. People may be called for giving the explanation and then, that is possible.
Under section 70, they can be summoned. Any person can be summoned. So even I'm of the view that even recipient can be summoned and his statement can be taken regarding this affidavit which he has given.
So external evidence, if they want to call for someone, they can even summon the third party and then ask them to, corroborate the evidence, like
Yes.
corroborate the facts or anything.
Yes, ma'am.
Okay, if that be the case, then it is very much possible.
That one sentence you have given in the last, no, the email has been sent before the.
Sir, in this case, they have sent an email, sir.
Yeah. So what is the sanctity of the email? Can it be said that it is a pre-supply communication?
Yes, sir. In this case, it is pretty much clear. Now, we were deviating a little bit from this case study and we were discussing, suppose there was no communication sent at all. And there was only an oral communication, oral agreement between these parties.
Oh, correct. Okay.
Suppose this email is sent, then I think we are more on a safer side that there is a prior agreement.
Correct.
Okay.
Now, the second issue which comes up here is the clause 1 says specifically linked to relevant invoices.
Hello.
Yes, sir.
Sir, sorry to interrupt.
Yes,
now,
sir.
In case if an email was sent, sir,
Yes, sir.
but the discount of 2.5% was not mentioned. If the email was sent that, if this limited threshold has been crossed, then suitable credit notes, as discussed mutually at that point of time, would be given as discounts. So what would be the scenario in such a case, sir? If the quantification is not fixed prior, but there was an agreement prior.
There is an agreement prior, but the discount, percentage of discount is not discussed.
Yeah.
And after reaching that particular threshold,
yes,
the exact quantification is done.
Yes.
Okay. And in this particular case also we can take, because here there are two options given. We don't know whether the particular recipient, he is going to choose the foreign tour or whether he is going to take this discount.
Yeah, but both are quantified, sir. He is only opting later on.
Option, okay. Can we take both these issues together, whether quantification done later, option chosen later?
Yes.
How will we go about it?
In my view, if the quantification is not there, it cannot be regarded as the term which is in existence, right? The term has to be in existence in very precise manner. So if it is not precise, you cannot say that it is in existence before entering into this transaction.
Can we say that there is no agreement at all? Because agreement itself means that there has to be a specific consensus set it up. There has to be a specific understanding of the contract. Specific understanding of the terms of the agreement, and without the rate, I mean the percentage of discount quantification, there is no agreement at all.
Actually,
Can I say I have
Yes,
a
sir.
different view?
Yes, sir.
See, I would say the agreement is in place. The terms of contract also is in place. The understanding is also placed. Both of us agree that we will quantify it later. The event is after outcome of it. And we both agree that we are okay if like if you reach 100 crores this way, if you reach 10 crores, it would be this way. And we don't know how much it will reach. But when it reached, there is no dispute on computation. So the mechanism is deferred to the future, and we agree the methodology of the mechanism. So I don't see that this point of not absolute amount not being there wouldn't make the agreement void.
Got it, sir.
Actually, the language of the section, what they say 15.3, the discount is established in terms of an agreement. So how would we justify that discount is established in terms of agreement if there is no quantification which has entered upon, agreed upon prior to supply? And the second condition is also very important, especially linked to the relevant invoice. So we have to consider both now.
No, it would be linked to the invoice. I will give you, let's say I have supplied you invoice 1, invoice 2, invoice 3, invoice 4. And over 6 months, whatever you are making purchases, basis value of your purchases, I will give you a discount. Now, discount is linked to the invoice. The quantum will arrive after 6 months.
So, Venuji, the question here is when it says discount is established, whether the
established
absolute amount of discount is to be established or only that there is a discount to be given, that has to be established.
The modality is to be established, not the absolute amount. Like we also say, you pay 30 days, you will get this. You pay after 3 months, you will get, you'll pay 1% interest. Now, it will not make that invoice as null, saying that you are not saying how much absolute amount I have to pay. Like we say, section 75, interest is automatic. I will not give it. So here my discount is automatic. I am saying my terms of discount. I don't need to quantify my discount at the beginning.
Again, Venu sir, in that case, can the agreement just say that you will be given a discount? Is that enough, or it should say the modality? Like if you are purchasing about this limit, then you will be given this much. If you are purchasing about 10,000, you will be given 10%. Like that, should it have a table or some, even though there is no exact percentage?
Some modality definitely has to be there.
Okay.
I think we are dealing with a valuation clause, and the specifically clause says the value of supply shall not include any discount if such discount is established in terms of an agreement. So I think value or quantification has to be there because it is what we are dealing is the valuation, and what is not to be included in the value. So it has to be established with the agreement. This is what my view.
Sir, we are talking about the second limb of discount, sir, which is we are talking about post-supply discount, not pre-supply.
Reading subsection 3, the value of supply shall not include any discount, which is then B, after the supply has been effected and discount is established in terms of an agreement. So I'm reading in totality.
Okay, I rest my case.
Sir, in this case, sir, the problem is, let us take the example, this particular example itself. Here it says more than 10,000 matters, then 2.5% discount is given. Sir, here again we cannot say the exact amount, which because the person can purchase 10,020 mattress or 10,500 mattress. So we'll know the exact amount that he is purchasing, against which he'll get the discount only after the supply. I mean, the condition is fulfilled. So in that case, I don't think the exact quantification of discount is never possible.
Exact quantification is always would be after the supply. But
I feel that if the discount policy is mentioning the slab-wise discounts available, maybe lower at lesser sale and higher discount on higher sale, then the condition is met, because there is a pre-agreement that in case I do this much sale, this is the discount. And therefore, Section 15 condition is getting met. The actual quantification is not required, in my view.
Whatever it is, in my view, it has to be mentioned in the agreement or whatever you say. One has to have the clarity that in what manner it is required to be given. Right. Unless it is there, I think the contract would not be the valid contract.
See, the
consideration is the precondition of the consideration is the precondition of a contract, right? Now the consideration has to be specified in.
I would want to take
Yes, sir. Yes, sir.
See, what Virendraji is saying, that the discount has to be established. See, there are two things. One is the policy for quantification, and second is the actual quantification.
Okay.
So, the policy of the quantification has to be there, and the quantification part can be done later on whenever the targets are met. There is one judgment which came in the initial period for Ultratech Cement on the same issue. In that agreement, in para 24, I have the decision with me. In that para 24, they said the company will pay discounts at such rates as may be decided by the company from time to time on the quantity sold to the authorized stockist in a particular month. So this was the condition in the agreement between the company and the stockist. And in that case, what AAR had said, I'm not going that AAR had said correctly, but I also concur to the view that in this case, that policy for quantification was missing. And since the policy for quantification was missing, therefore, this was held to be not to be covered by way of exclusion from 15(3)(b). And similarly, if we, although not for GST, but there was a income tax judgment in case of determination of remuneration of partnership firm of partners, wherein in case of 40(b), it says that the remuneration has to be paid as per the partnership deed. In that case, also previously in income tax, merely saying that the remuneration will be given on mutually agreed terms later on, it was held that the quantification, the manner how to quantify should be there. The actual quantification can take place later on. So the term established has to be read, in my view, with the policy for quantification, and there should not be any ambiguity that how the quantification would be done.
So Arpit, can we say that as soon as we list down the rates, that on reaching this target you will get this much of the discount, then it is in itself, it is the establishment of the amount,
yes,
isn't it?
Yes, yes. Yeah. Because achievement is something which only can be decided in future. So the amount cannot be quantified, but the specific establishment should be there.
See, that is what Virendraji is saying, and you are saying that I am just adding it to something to it, is that as soon as we put the percentage in it, that this percentage of the discount would be given on reaching 10,000 mattresses. In that case, in my view, the discount is established. Yes. It is nothing to do with the rupees. It is established that as soon as you get this, the discount is established.
Yes, yes. That's my
correct. Agreed.
Yeah.
The next limp of it says that specifically linked to relevant invoices.
Sir, Padmanabhan sir?
Yes, sir.
Yes, sir. So in the 2.5%, now let's say like when actual 10,000 threshold is being reached, the parties mutually decide to fix the percentage as, let's say, 2% instead of 2.5%, or let's say they keep it as 3%. So if discount has to be established in terms of an agreement, which is already entered prior to the supply has taken place, and later on if there is any supplementary agreement which is varying the quantum which was already decided in the initial agreement, can we still say that discount is established in terms of an agreement?
Sir, personally, I would say yes, sir. It will go back to the original agreement. Am I
Fine,
audible,
fine.
sir?
Yes, sir. Yes.
Yeah. Any other difference of view?
In my opinion, Panalji, if 2.5 is reduced to 2%, then
No
it
problem. But if it gets to 3%, then that may be a problem.
there might be issue, because this is not a rectification. This is a new term which is being agreed upon, so it would be effective from the date on which the agreement would be entered.
Got it. Sir, any other views on this? Sir, now slightly deviating from the question, instead of saying 2.5% discount, if they are giving the money value of this Thailand trip, let us say 1 lakh rupees, they are giving 1 lakh rupees. Now, is it hit by this any of the if any of the condition is violated here, specifically linked to relevant invoice? Is it getting violated if instead of giving it as a percentage, it is given as a lump sum amount?
So how would be they passing on this in term by way of credit note?
Credit note, yes.
The Thailand visit, the visit.
Not the Thailand trip. I mean, instead of this 2.5% discount, they are giving the money value of this Thailand trip. Let us say that comes to around 1 lakh. They are giving 1 lakh in the form of discount.
So will it be part of the agreement which was entered prior to the supply?
I am just changing the terms of the prior agreement, that instead of 2.5%, it will be a lump sum amount.
No, it will be option of foreign tour to Thailand of 1 lakh rupees.
Yes.
So both of these would be there.
Yes.
If that is the case, in my opinion, the discount part can be excluded if the dealer opts for it.
Can we say that it is still specifically linked to invoices?
No, that has to be there. That is the second part. Then how they link it with 1 lakh rupees. Only stating that the establishment is there. Now coming to the second condition, specifically linked to relevant invoices, then it has to be there that how that 1 lakh rupees is being linked. It might be a case that they may say that either a trip to Thailand or 2% encashment on each of the invoice. So this might be a case wherein both these conditions would be satisfied.
That is the existing scheme, current scheme.
Yes, sir. I am saying that the agreement might contain that the dealer is entitled to a foreign trip to Thailand, or he may encash the trip, wherein the quantification would be based upon not saying 2.5%, let's say 1.5%.
Okay. Sir, but the problem is this scheme is for dealers, all the dealers who have purchased more than 10,000 mattresses. There may be dealers who have even purchased 20,000 mattresses. So even 1% will go much above this amount which is coming for this foreign tour.
No, if there's a specific 1 lakh rupees wherein it is not linked to invoice, then 15(3)(b) exclusion would not be there, in my opinion. And if it is linked with each of the invoices, see what I said, there are two things. One is establishment and second is linking to the invoice. So in case of a fixed amount of 1 lakh, there might be a case wherein establishment is there but specific link is missing. In case it is not a round figure of 1 lakh or some percentage to each of the invoices, in that case, both these conditions might be satisfied.
Okay. Any other views on this, sir? Any other views?
So here my point is that if the scheme states that if I achieve say 10,000 turnover, then I get a Thailand trip. In that case, even though it is in kind, I can say that all the invoices which gave me that 10,000 revenue and satisfied the condition of Thailand trip are the invoices for which the discount is given. So when you say linkage to relevant invoice means, do we have to issue the credit note with the relevant references, or we have to link it in my books of accounts? Moment I link it in my books of accounts, I think it should be sufficient.
You are saying that this linkage of invoices refers to that to the main condition, that is 10,000 mattresses.
Correct. Moment
Whether,
I
whether
10,000
that linkage
mattress.
should be to the condition or whether linkage should be to the discount. That is the question I think you are trying to pose here.
Sorry, I didn't get your question. If you could repeat it, please.
No, what I'm trying to say here is that the specific linkage to invoices, is it with reference to the condition for the discount or is it for the discount itself, is what we have to look here. Am I understanding it right?
Yeah. Such discount is established in terms of agreement entered into and specifically linked to the relevant invoices. I think discount has to be linked to the relevant invoices.
Okay. So suppose it is like a bulk 1 lakh rupees, then you are saying it cannot be linked to specific invoices, so it cannot be reduced.
No, I am saying that moment it is a bulk invoice, it is not in terms of percentage. It is an absolute number or an absolute in-kind benefit like Thailand trip. I can say that it is linked to all those invoices which enabled me to get to that discount. So if the condition was if you sell 10,000 mattresses, you will get a Thailand trip. I can say that all the invoices which lead to sale of 10,000 mattresses are actually the invoices for which the discount has been issued.
Got it, sir. Got it. Any other
And
views
I
on
think
this?
they have amended section 34 in between, wherein earlier, if you see that in GSTR 1, we had to correlate this credit notes with each
Invoices.
invoice. I think they have not amended here in section 15 to my mind, because if 34 is amended and no one-to-one linkage is required, then why in section 15.3 that linkage is still remained? I think it is something which can be corrected.
Correct.
Pradhanji,
Yes, sir.
let's try to analyze that why 15.3 is there. 15.3 calculates the value of an individual supply. So 15.3a says that if an invoice is there and the discount pertaining to that supply has been deducted on invoice, then it can be deducted from the value of supply. So 15.3a is speaking about not only 15.3a but 15.3 and 15, section 15 itself is speaking for individual supply. So when I come to 15.3b and the condition is specifically linked to relevant invoices. So in my opinion, if it is said that 1 lakh rupees is linked to all the invoices for which 10,000 condition was satisfied, this would not be complying with the intent of the condition of 15.3b, because by way of 15.3b, the legislature is trying to identify the value of supply for an individual supply, not for all the supplies for combined. So let's say that there are 10 invoices for aggregating which the 10,000 mattresses have been purchased. Now for all those 10 invoices, it is said that 1 lakh rupees discount is given for 10 invoices. Now there is no specific linkage that how that 1 lakh is being correlated to each of the 10 invoices. So in my opinion, because 15.3b says the value of supply shall not include any discount which is after the supply has been effected. So it is referring to each of the supply on an individual basis. So in my opinion, if a round figure 1 lakh is given, not specifying that how much discount is pertaining to an individual invoice, this specific condition of link to relevant invoices would not be satisfied.
And we can also go back to 15.1, which says the value of a supply.
Yes.
There again, we are establishing value of each individual supply separately.
Yes. So that 1 lakh rupees has to be identified for each of the invoices separately.
Yeah. And also the amendment
to say identified means what? Moment I issue a credit note for each of those invoices which led the 10,000 mattresses sale, the quantum I achieved, is it not getting linked? Because when as a customer, as a seller, I promise to my client or customer that you purchase 10,000 invoice mattresses, you will get a discount of flat 1 lakh or a Thailand trip. Then the customer also in his head, ki if I sell all the 10,000 mattresses, I am going to get this discount. So in a way, it is getting apportioned equally in all those invoices which are leading to 10,000 mattresses sale or purchase, whatever we want to say. So according to me, it is getting linked, and linkages I have to decide if I'm issuing a credit note stating that these are for all these 10,000 invoices, assuming one mattress, one invoice. So 10,000 invoices, the condition should get satisfied.
So in that case, the agreement should clearly provide that that 1 lakh rupees would be apportioned equally to all the invoices. Because in my opinion, since the term established has been given, so that nothing can be left to assumption or something to be determined later on. It should clearly contain that thing.
So in that case, sir, are you trying to say that always whenever we are claiming discount under 15(3)(b), it has to be in terms of variable amount? Or it can be fixed amount, but there must be a clause which says that then it will be apportioned to each invoices, particular invoices.
Yes, in my opinion, that has to be the case. If we read established and specifically linked to relevant invoices.
So there
And
can be a bulk
term
amount,
or
but there
supply.
must. Yes.
I also want to add a point here that although theme of section 15 is like that it is going to identify value of each supply, but lawmakers are smart enough to understand the common practices prevailing. That's why they have used the term linked to relevant invoices. They have intentionally used here invoices, otherwise they could have used here invoice only. So to my understanding, they have intentionally put here linked to relevant invoices in order to cover this situation which we are discussing. This is my view.
Invoices have been used because the agreement might contain that wherein upon satisfying the condition, the combined number of invoices could be more than one on the basis of which the condition has been satisfied. Because
That's what we are saying now. There can be more than one invoices, but although theme of section 15 is going to identify value of each and every supply, but here they have specifically mentioned specifically linked to relevant invoices. So
Yes,
absolutely agree that there can be an agreement and it can have more than one invoice. That's why here they have used the word invoices. So in order to link that 1 lakh rupees, I don't think that there is a requirement to link that 1 lakh rupees to each and every invoice. But it can be linked to all the invoices which are covered in one agreement.
Yes, that's what it can be, it should be coming from the agreement that it can be linked. It cannot be left to be determined later on. That is what is my view.
But one more thing I wish to add that 1 lakh rupees, it is not essential to link the part of each and every each and every part of 1 lakh rupees to separate invoices. I want to say that if there is a single agreement, there are multiple invoices, then 1 lakh rupees can be linked to all the invoices. There is no need to make any bifurcation of that 1 lakh rupees to each and every invoice. This is what I want to say.
Sir, the problem may arise. Let's suppose if these invoices are spread across 2 different financial years. If all these invoices are in one financial year, we may go up with giving one credit note for all those invoices. But if they are spread out in 2 different financial years, we may have to give 2 different credit notes.
Why, sir? Why can't there be one credit note for all those invoices?
Because section 34 doesn't allow it, sir.
No. Okay. Of course, well within the timelines of section 34.
Yeah, within the time limit, sir. But section 34 allows one credit note for multiple invoices within a financial year.
Why do you say, sir, as on October, if I issue, why can't I take care of April to July? I'll take. So I will issue before 31st October.
No, not that way, sir. No, if the invoices, my point is, if the invoices are pertaining from January to, let's say, July, for which one credit note needs to be given.
Okay.
against all those invoices.
Okay.
Even if it is issued within time limit, section 34 would not permit it, sir.
Where, which aspect of section 34 you are saying, sir? That
Venugopalji, section 34, subsection 1, which provides that the registered person who has supplied such goods or services or both may issue to the recipient one or more credit notes for supplies made in a financial year.
Okay.
So that's why they are for supplies made in a financial year. So if there are credit notes for supplies which are having 2 financial years, then 2 separate credit notes would have to be given.
So this also leads to another question where there is an implied condition that this condition of number of mattresses, it should not fall beyond the time limit of 34. Because then the specific linking will not be possible.
Sir, is it in a financial year different from in the financial year?
Or in a financial year, in the financial year? For supplies made in a financial year, that is the supplies which have been made in a particular financial year.
I will think.
So-
I don't have an immediate answer to counter, but I am also not in agreement, but let me think.
Yes, it's definitely. Now, one thing which I would like to share, and everyone can have the views, whether 15(3)(b) is at all connected with section 34. Can we have a view that 15(3)(b) is separate and it is not connected with section 34?
I feel it is interlinked. The timeline, the modalities to issue a credit note are laid down in section 34, and section 15 is merely a valuation provision. Therefore, and 15 and 34 have to be read in together and not in isolation. So according to me, 15 and 34 have to be read in tandem to get the implementation of credit notes, GST credit notes. Otherwise,
Let's take an example. Let's take an example. Section 34 uses the term credit note can be issued where the tax invoice is found to exceed the taxable value. The specific terminology which has been used in 34(1) is found to exceed the taxable value. So supposedly my agreement says that if this amount, this much offtake is done, then you would be entitled for this much discount. And that condition is for 2 years. Supposedly say for 22-23 and 23-24. And on March 2024, I earned a discount of 2% for all the supplies in 22-23 and 23-24. Now 34 says found to exceed the taxable value. So as on 31st March 24, I came to know that I was entitled to the discount, and that's why 15(3)(b) was applicable upon me. So 34, if intent of 15(3) would have been to change it with 34 or restrict the time limit of achievement to 34, this is a counter view. I'm not saying that this is my final view, but this is a view that 15(3)(b) and 34 are operating in different spheres.
Arpit sir, in that case, what will happen to this discount of 22-23? Will the
Yes, that's what I'm saying. That for 22-23 and 23-24, I satisfy 15(3)(b)(1) condition on 31st of March 2024. And since 15(3)(b) is not governed or subject to section 34, it is operating on an independent view, and 34 is only operative when I have found that I have exceeded the taxable value. So on 31st of March 2024, I did not found that I have exceeded the taxable value. It is a condition which I have only completed on 31st of March 2024.
I also concur this view because section 15 subsection 3 is for the purpose of determining the value of the supply, right? So, and section 34 is having, of course, a different purpose. So section 34 cannot override section 15 because 15 is giving that particular benefit to the taxpayer.
Arpitji, we are practically having this litigation issue right now because this interpretation has also been forwarded by the tax team at IRCTC for its rail near bottle manufacturers. So they've taken a position that even 17, 18 and 18, 19 invoices for which some rate schemes are eligible because of post-supply conditions, they can pass on the discounts right now and they are demanding the discounts with taxation. So whenever we tried it, department audit is not agreeing. So right now it is before adjudication. Let us see what happens.
Yes, Vrindavanji. If there are no any other view, we can.
I would request you to take it forward.
Yes, sir. Sir, next issue is with regard to reversal of credit. Attributable to discount on a discount on the basis of document issued by the supplier has to be reversed by the recipient of supply. Here, what I understand is that we will be anyway reducing whether we should have some documentary evidences before we reverse this credit, or we will reduce the credit and the department has to come out and say that the recipient has not reversed the credit and hence this cannot be reduced from the value of supply. What will be the view on this? On whom is the onus of proving that the recipient has reversed the credit falls first? With regard, one case law I could found with regard to customs. Whenever there is an undervaluation, it is for the department to say that there is undervaluation supported by some evidences and information. So can we take a similar view here, saying that once I have reduced this amount from my value and the department says that there is an undervaluation to that extent, the onus is on the department to prove that the other person has not reversed the credit.
So you mean to say that the onus is on the supplier to prove it, that whether the recipient has reversed the credit?
No, onus is the supplier will be reducing the value of taxable supplies and declaring in the returns. Now
Correct.
to say that that is wrong, the department has to come out and say that recipient has not reversed the credit.
See, these days credit is flowing from GSTR 2B, and once you are reducing the value and issuing credit note, that said credit note is reflecting in GSTR 2B, so there is automatic reversal of ITC at the part of the recipient. So I think this condition can be fulfilled in that manner.
Automatic reversal to the extent that he has to reverse it in his 3B also.
When there is any reduction in the input tax credit by way of GSTR 2B, he is not obliged to take that input tax credit. He has to compulsory reverse it.
Now, suppose he has not reversed it.
Done.
If he has not done, then to my understanding, first department has to approach to the recipient for taking incorrect input tax credit rather than approaching to the supplier to prove that ITC has been reversed by the other person.
Assuming that if the department has done that and they have valid information that the other person has not reversed the credit, now can they come back to the supplier?
No. Recently, there is a decision of Madras High Court also. Now, I'm not getting that citation, but in that case, it was stated that if first investigation has to be done at the person who is making the default, then only you can approach to the other party to recover the demand.
DY Bithel, I think you are talking about. That was in the context
Not DY Bithel, not
Okay.
DY Bithel. Let me give that.
I think you're talking about Supreme Traders.
Just a minute. I'll get back to you.
Padmanabhan, can I just invite your attention to the Rajasthan High Court's case in the case of Hindustan Unilever?
Okay.
So I'm reading para 6, where the court observed that it's a challenge to 15(3)(b)(2). Where the court observed that whether we find that the validity of the provision is being challenged more on the ground of workability. for the present, we find that in absence of there being any statutory obligation cast on the respondent to undertake the matching exercise, if the petitioner is willing to claim reduction in tax liability, proof of reversal by the recipient is to be provided by the supplier. So it appears that the court is inclined to favor the department to ensure that the supplier proves that the recipient has reversed the ITC.
Probably that is why I think in the last couple of months we have been getting a lot of requests from the clients for CA certification regarding this that they have reversed the credit, especially with I've seen the cement industry. There are a lot of requests for certification. I think that is common across everywhere. Arpitji, what is your views on this, sir?
See, Uniji, whether it is a final judgment which has been given by Hindustan Unilever?
No,
Because
it is interim.
it is interim. What I have heard from the counsels who were present in that hearing, that the final hearing in this case has also been done, but the counsels who were appearing for the petitioner, that is Hindustan Lever, did not brought in the aspect of Section 43 and its non-availability. So more or less what the counsel, my friend who was there in the court, he said that more or less this judgment would be coming in favor of the department, since this operative part of Section 43 was not challenged. So if the judgment comes in favor of the recipient, in my opinion, this has to be seen in context of the argument which were made and how the court viewed. But if independent opinion is saying, then we have to see 15(3)(b) condition of reversal of credit by the recipient vis-a-vis Section 43. Because in that case, Section 43 enabled the supplier to know that whether or not the recipient has reversed the credit or not. And since now Section 43 is not there, and what is in the hands of the supplier is issuance of the credit note and reflecting the same in GSTR1 and the corresponding reflecting in GSTR2B. So this is the best which can be done by the supplier, and therefore applying lex not cogit ad impossibilia. Therefore, in that case, to that if this is done, then beyond this, if the recipient does not reverse the credit, in my opinion, the liability cannot be fixed upon the supplier.
So just one point, I agree that maybe from since the 2B has become mandatory, the recipient can view the credit notes and should reverse it. But for the period prior to that, up to December 21, there will be a challenge on this particular aspect, whether the customer has reversed ITC or not, when 2B was not in vogue.
See, again, it is an inefficiency on the part of the department. At that time also, I was required to report the credit notes in my GSTR1. So they were appearing in 2A, and it was on the department to provide the mechanism to view 2A on a timely basis, which if they have not done, again, that responsibility. What is happening in case of tribunal, one of the high courts have said that creation of the tribunal is in the hands of the department. And so if they are not able to create the tribunal, the loss cannot be suffered by the taxpayer. So on the similar consideration, this 2A and 2A aspect also goes up to 31st of December 2021.
But here the onus to ensure that credit has been reversed is on the supplier who is issuing GST credit note. So how can we shift that burden to the department?
That is where I have a small difference of opinion. Unlike 155, here it says this is only a condition for reducing the credit. Rather, it does not pose an onus to say that you have to prove that the other person has reversed the credit. The onus, I think, will be first on the department to prove that they have not reduced this. I mean, they have not reduced the credit. I mean, reverse the credit.
Provided I have shown in GSTR1 and it is reflecting in 2A, the onus is on the department. The onus is not upon me, and we have to see 15(3)(b) when it was implemented on 1st of July 2017 with respect to the functionality which was there to enable the supplier to know that whether or not the recipient has reversed the credit or not.
I think there is no provision parallel to 155 for this particular clause.
In my view, what is not possible is not possible. So the burden is on the department only. Whatever I could do at my best is to show that particular invoice in GSTR1. That's it. after that, what is happening is not in my control.
No, why do we say that it is not in my control? Because I could have taken a declaration or an undertaking from my customers in advance.
So take the declaration, then go ahead.
What is the legal sanctity of that declaration? Whether after taking the declaration, I would come to know that yes, definitely it has been reduced.
And who knows that after reversing it, one is reclaiming the same. So that is not in my hand.
Sir, also one aspect I would like to link here is with regard to 34 subsection 2 proviso, which says that provided no reduction in output tax liability of the supplier shall be permitted if the incidence of tax and interest on such supply has been passed on to any other person. Will that have any bearing on this particular issue?
In my view, it is something different, sir. When you read the passing of the incidence of the tax, etc., though it is not, this particular phrase is not defined over here under section 34 subsection 2, but that is, the inference may be taken from the reading of rule 89 subrule 2 clause M. Okay, where the explanation provides the meaning. So I think that is absolutely a different aspect, and it is not in relation to this, in my view.
Padmanabhanji.
Yes, sir.
So today's time limit of try to finish it by 10 so that everyone can have their schedule.
Yes,
so I would ask Venuji for the vote of thanks for today.
I was about to stop. So Padmanabhanji, so can you just logically conclude this point and we'll take it to the next week?
Sir, that is the most difficult part, coming to a logical conclusion. Because of our discussion, nothing comes to a conclusion, only a pauser for thought. But
No
anyway,
problem.
we have discussed very in depth on just one section today, that is subsection today, that is 15.3 subsection B, I mean subclause B, that is post supply discount. And I think we have fairly come to a conclusion that the agreement part of it has to be either, it can be oral or written, but there has to be some evidence to support that there was an agreement prior to the supply. And also we came to the point where it is not necessary that the exact amount of discount has to be quantified, but if there is a modality or a computation provision available in that agreement, that would suffice for the purpose of establishing in terms of an agreement. And also we've seen very many aspects of specifically linked to invoices, especially when it falls beyond different time limits. Coming to this input as credit, reversal of input as credit by the recipient. Though we don't have a consensus, I think we are more on a side that the onus is on the department to, especially when we have shown these credit notes in our GSTR1 and it is reflected in the other person's 2B. We can fairly say that the department has to come out and say that that person has not reversed the credit. And to that extent, onus is on the department. I think that is what we discussed today. I'll hand over the proceeding back to Venuji for taking it forward.
Thank you, Padmanabhanji. And as mentioned, like this objective is to only ignite the thought process and bring the discussion. As I mentioned in the beginning of the session, I will only request members to always put forth their views and not expect the others to believe your views as truth, because everything is a view. And let's always have a healthy discussion, but not try to impress upon that the only view is my view. I think we should always agree to disagree with each other and go with that. So with this note, we conclude for today. We continue the valuation, the other sections and the rules in the coming thing. So this is being going in a good track. We're all thinking and exploring things. And Padmanabhanji, thank you so much for actually moderating and putting it in the right way, allowing the participants to discuss. So thank you, everyone. Good day.
So Padmanabhanji is adding true value to the value of supply.
Thank you, sir. Thank you so much.
Yeah. And all the sessions are recorded and we have it on YouTube, so we can always watch it. Yeah. Thank you.
Thank you, sir.
Just
Thank you.
a question. whether we have uploaded all the videos over there?
Yes,
Because few sessions I have missed. So
yeah.
2 months back, I've seen that channel, and I also raised this point that, I think all the sessions were not uploaded on that.
Okay, we have 2-3 sessions in between missing. So what happened is someone clicked record on the computer and it was not tracked, but otherwise all sessions videos are there. I'll again share the link. I'll put it in our group thing.
Okay, sir. Many thanks.
Thank you. Thank you, everyone.
Thank you, sir. Thank you. Thank you, everyone.
Thank you.